Hi guys, Ola Sulaimon, and it's Friday already. What's today's date? Third, fourth. Hi guys, it's the 4th of October today. It's been a very, very, very busy week. However, on today's show, I'd like to talk about dying. Oh God, it's something I'm not so comfortable about talking about. It starts to be done as well. So today the question is, do I have to pay tax when I die? Depends on your situation, depends on your circumstance. You can end up paying after you're gone. Someone in your family would have to pay, or better still, you will still have to pay, kind of. So today I'll be talking about inheritance tax. It's a tax that is paid by an individual when they're gone. You'll be wondering, how would I do that when I'm gone? So what happens is the person in charge of your estate would have to pay this money to HMRC. However, before I continue on this show, my name is Ola Sulaimon. If we've not met, I'm an accountant and tax advisor. I advise individuals and small businesses on their personal tax, on their business, ensuring that their work is done properly. The reason why I do this is because a lot of people do not have all this information, this tax knowledge, just basic tax knowledge, just to give awareness of what you should be doing or not doing. Because what I usually say with tax is, if it is done very well on time, if it is planned on time, you don't have to worry, you pay less tax. But if you leave it too late, then you're missing on the tax relief you're entitled to. Or better still, you're paying too much tax than you should be paying. So the reason why I've been doing this is just to create awareness, know what you're entitled to, do the right thing on time, and then enjoy the tax relief. Because to be fair, nobody really wants to pay tax when they're alive, not talk of when they're dead. I think this is the 10th or 11th week, or I don't know, I've lost count now. However, I've got loads of video from these live shows and other videos as well, which is like it's on my YouTube channel, Runs as Accountant, where you can watch loads of knowledge that would help you to pay less tax basically, or do the right thing. Alright, after introduction, normally I usually on this show talk about my week, how fantastic it has been. However, the last 1 week has been very, very hectic. It's very, very, I don't know how to even explain. I've continued to practice on my swimming. I've had a bit of cramp, so I've tried to slow down on my swimming practice this week because my leg has been hurting a lot. The reason why I've been swimming is because I'm taking a challenge on November 3rd to raise money for the food bank and for a children charity. So I'm just gonna go. But however, I'm going to apologize. This show is just to introduce inheritance tax. Inheritance tax is very, very wide, it's massive. I promise next week I'll do another one so as to explain better and give you tax advice on how to plan ahead. But this one's just to introduce you into inheritance tax. So I'll continue. So we might not end up spending 30 minutes. So inheritance tax is a tax, like I said earlier on, that is imposed on your estate when you die. You can say, what is estate? Estate will be all the things you own when you're alive. So probably if you have a property or you have properties, if you have jewelries, you'll be surprised. If you have what do you have again? Insurance at times, life insurance at times. If you have money in the bank, and the thing is, if you're caught under inheritance tax, doesn't matter where this money is, you still have to pay inheritance tax on it. So basically, somebody's going to bring out all the list of everything you've got, and they'll pile up everything together, and then you don't worry about the tax you pay at that point in time. So the tax is paid on the excess I have. Now the only thing is, the excess of work, you're not paying tax on everything. It's whatever goes over 325,000. Now you'd wonder, oh, that's not a lot of money. To be fair, it isn't, because some of us, we actually have properties that are worth more than 325,000, and probably you have one or two. By the time you add two together, and then you're deducting 325,000 out of it, you'd have to pay inheritance tax at 40%. I was in networking event recently, and they asked the question, like, what do you think the rate for inheritance tax is? I knew the answer, and I sat down, I was just smiling, like, who would not know the answer? Like, But we're surprised that a lot of people did not actually know that inheritance tax is at 40%. 40% tax. I think the reason why HMR, I don't know, I keep having all these ideas why they do things is because probably if you're alive in real life, when you spend money or when you earn money, you pay tax on it. And then if you decide not to withdraw money out of your business because you don't want to pay tax, so as soon as you die, the business is going to be valued and then you pay inheritance tax on it. So it's just a way of saying, by not touching those properties, by investing in loads of properties because you don't want to spend cash so that you don't pay tax, does not mean you will not pay tax when you're gone. So that's my own explanation in my head. So it's only all the excess that go over 325 that you pay tax on. So the tax you pay on is 40%, except if you plan very well ahead or you do the right thing. Now, another thing is when someone's got a husband or wife, I'll explain that later on. While you die, as long as you've transferred everything you have to your wife, then you don't need to worry about inheritance tax. Or your husband. What happens is as soon as your husband died, that will be the person that will be worrying about inheritance tax because everything has been passed. I'll explain some other type later on. Now, how do we calculate this inheritance tax? For example, if you have a house, what they do is they take out all the mortgage out of it. So let's say your house is 325 and you've got a mortgage of 100,000. That's not your money. You're owing someone that money, so they'll deduct that amount. So it's whatever that is still left that they would want to calculate the inheritance tax on. So it's the loss to you. Now, another misconception is you only pay inheritance tax when you die. That's not true. It's possible to pay inheritance tax when you're alive. And I think these are the smart people that have planned their stuff very well in such a way that when they die, they don't have to pay that much because they've organized everything very well while still alive. So it's possible to pay inheritance tax when you're alive. It's possible to, and then whatever is left, you pay when you're gone, and or you pay extra additional tax on whatever it is when you're gone. Now, next question is, do we all pay inheritance tax? To be fair, the answer is no. I know it sounds somehow. However, inheritance tax is based on people that are domiciled in UK. If you're domiciled in UK, if you fall under, if you are domiciled in UK, you have to not just pay inheritance tax on your UK assets, you pay inheritance tax on all your assets all over the world, wherever they are, as long as they can get a hand of it. You have to pay inheritance tax on it. Now, to be domiciled in UK, either you're born in UK, definitely you're domiciled in UK by birth, or you've chosen UK as your domicile origin, either through marriage or whatever, or you've been resident in UK from 2017 to 18 onward, or better still, you've lived in UK for at least 15 out of 20 tax year before the relevant year. The relevant year is the year probably that you die or the year that you're trying to transfer the asset or something. So if you're not domiciled in UK, probably because you've not been in UK in 10 years or you don't fall on under any other of those things, then you're not domiciled in UK, then you don't need to worry about inheritance tax. However, time goes very quickly and before you know it, it's going to be 15 out of 20 years and then you fall within inheritance tax. So if you live abroad or you're not domiciled but you still have UK assets, then you need to still pay inheritance tax on the UK assets. Now, inheritance tax is one of the sources of income to UK government. However, they only get a little money out of it because a lot of people plan their inheritance tax very well, or probably they don't have enough money to go over the 325. And now last year, I think it was 2 years ago, they introduced even if you're living a family home, you can even get more relief. So because of that, a lot of people are actually finding a way of not passing through the net of inheritance tax. Now, there are 3 types of gifts. I'm just going to briefly talk about that, and then probably I'll explain better next week. Now, there are some gifts that you don't, when you give it, you don't pay inheritance tax on it. So if you've given a gift to your child, probably because of you're being nice, it's for maintenance of family, it's for waiver of dividend, it's ignored for inheritance tax. But there are 3 types of transfer. I'm going to try and speak as simple English as possible. So there's one that's called the chargeable life transfer. This is the one that people that are still alive, they're trying to plan their stuff very well. So what they do is they probably move all their properties into an estate, or they're trying to give someone out of what they've got so that they don't have to pay so much after they've gone. Now what happens is, so the most common one is the ones you do to discretionary trust. At that point, while you're still alive, then we need to calculate your inheritance tax. We need to check how much you've given in the last 7 years, and then someone professional would have to calculate it for you. And then either you pay 20% tax at that point or 25% tax at that point, depending on who is paying. So if it's the trust that is paying, it's a different charge, and if it's you that is paying, it's a different charge. However, when you then die, I'll explain that in a minute, then you have to pay additional tax at that point. But I'll tell you the reason why you might not pay in a minute. Now, there's some exempt transfer. I mentioned earlier on, when you gift all your things, all your properties to your spouse, you don't have to pay inheritance tax on that. As soon as you die, they move everything to your wife or your husband or your civil partner, and when they die, that's when they need to worry about inheritance tax. Now, the good thing about that is, when they then die, they don't just have the 325,000 band, they have an extra 325 which is theirs. So at the end of the day, they have 650,000 to worry about. That will be their relief. So they both have both theirs and husband. They inherit both of them together when they die. So because of that, I think that the reason why they've done that is, when couples have things, most likely it's usually joined together. So by the time this other person died, then they can then say how much they're actually passing to their children, or how much they are gifting to other people. Another exempt transfer is the transfer that you give to charities in European Union, and that might change after Brexit, or in UK. So every time you give a gift to a charity, you don't pay inheritance tax on that. So what happened with that is, let's say someone dies today now, and you've got £1 million. That's the total of your estate. And you give your wife almost everything except 50,000 that you've given to. So you've given your wife like 950,000 of your estate, and then you give a gift to a charity, let's say breast cancer or something. That 50,000 that you've given to that charity, you still don't pay IHT on it because you've given some of that money out. Let's say you give your wife just 750,000, and then you give your children 100,000, and then you give charities the remaining. So it's just the one that you give your children that you pay inheritance tax on. Other gift you can give is small gift that is not more than £250. When you give to your children because of marriage, or your grandchildren because of marriage. So that would be like 5,000 or 2,005, depending on who is giving. Then every year we are all entitled to giving a gift of £3,000 without worrying about inheritance tax. So let's say, as young as I am, I've got loads of stuff that I want to give out. So what people will do is they'll make sure they give 3,000 worth of the inheritance tax so that they won't have to pay so much when they die. Now the advantage of I know that allowance is there, but usually most of the time, for most of us, we don't even use it because we don't even know it is there. Now the third type is the potential exempt transfer. I think this is the one that is the most common, and I'm going to try and relate this to the other two I've explained earlier on. Now, every other gift you give, apart from the chargeable transfer or the exempt transfer, is potential exempt transfer. The reason why it's called potential is, if you can make sure you live for the next 7 years, you don't need to pay inheritance tax on it. So let's say I decide that I've got so many things, I'm going to give it to all my children right now, and then I live for another 7 years. Even though it's still part of what I have, I don't pay inheritance tax on it. Now the reason why they've done 7 years is because some people, they just fall ill, and they feel like, oh, I don't really want to pay inheritance tax, and then they start giving all their stuff to their children, that when they die they don't have to pay inheritance tax. However, with that one, anybody that can go over the 7 years without dying, then they don't have to pay inheritance tax. And that affects the chargeable transfer as well. As long as you don't go over, if you live another 7 years, you don't need to pay any inheritance tax at all. Now, what happens is, if you at least can live 3 years plus, every year you pay reduced inheritance tax. Every year you'll be given a relief until that 7 years. So the main thing is to make sure that you live another 7 years so that you can enjoy not paying inheritance tax at all. Now, the most common one is people giving their family, their houses to their children and say, oh, I don't want you to pay inheritance tax when I die, so I'm just going to pass the house to you, and then that's it. However, by gifting the house to your child, you have to ensure that you're not enjoying any benefit whatsoever from that house. For example, you're not living in that house rent-free. Even if you want to continue to live in the house, just make sure you're paying rent. Because by giving the house to your children and still living in the house, enjoying the benefits, it's still like it's yours. Or probably you give a car to your child or something, and then you're still driving and you say you've gifted it. Because what they're trying to do is to make sure that you've actually given this gift in advance. So for every potential exempt transfer, you don't pay any IHT until that person dies. And if you're lucky enough that that person does not die in the next 7 years, then it's not going to be added. It's going to be deducted from. It's not going to be added to what the IHT that will be calculated. What I've just tried to say is, for example, let's say I have an estate of £1 million, hooray, and then I've given 2 of my properties that is 750,000 to my children 7 years ago, and then I don't know, I should not use myself as an example. Okay, Mr. A Mr. A gave all property of 750,000 and then decided to die 7 years after. Now what happens is, even though the estate is 1 million, that gift has been given 7 years ago does not come in. You don't pay IHT on it. So we actually just take it out like it's never happened, because it happened 7 years ago. We don't want to worry ourselves about that at all. So because of that, it's only the one that is still left has not been gifted. So let's then say that the remaining of my estate is 250,000, and by 250,000 it's still less than 325. I don't pay IHT, or Mr. Hay does not pay IHT, and then escapes. Now, so it's about planning properly, planning in advance. I know I've been talking about properties. However, business is one of the things you can gift your children as well, or you can plan it in a very, very nice way, such a way that you don't pay IHT on it. Now, for those of us that joined us later on, I actually said I have to apologize for today because it's been such a very, very busy week. So today is just about introducing IHT. Next week, I'll come with more examples of how to plan yourself in such a way that's to reduce your IHT in future. What to do to make sure that you don't pay too much tax when you're gone. Because what happens is, if you don't plan ahead very well, what then happens is you then have to pay 40% of whatever you've left. These things are things that you've actually paid tax on them at some point in your lifetime, and then you die again, and then you're paying inheritance tax on it. So today is just about creating a light bulb moment for you to be able to join next week, and then you can put some plans in place just to ensure that inheritance tax is reduced to the minimum in the nearest future, 20 years, when you die. However, before I finish today's show, which I'm going to round off very, very, I think it's the shortest one so far as well. Yeah, I'm taking on the challenge to raise money for the food bank and foundation that I support, which provides school items for the children, pay their school fees, buy uniform, all sorts of things, just to ensure that they have a better way of better time in school in Nigeria. The challenge is taking an aquathlon, which is swimming 400 meters and running 5K to raise money. If you'd like to read my story, you can go to my Just Giving page. It's Ola Sulaiman on the Just Giving, you'll find my story there, and if you could make some donation, I would appreciate it. So next week I promise to have a proper plan in place, and then hopefully that would help you. I hope you have a fantastic weekend. My name is Ola Sulaimon.